If you're wondering what your favorite tech stocks are going to do this week, then you have come to the right video. Stick around, don't skip any part of this video because I have a very secret strategy that I teach my Discord and students how to gauge the market Monday morning in the overnight hours on Sunday. And you can also use this strategy during the week. I'm going to have it in this video somewhere, so do not skip the video. Watch the entire thing because I'm going to explain everything to you. We're going to talk about the VIX. We're going to talk about SPY, Meta, Microsoft, Palantir, Tesla, Google, and SOFI. And I want to explain to you guys exactly what's going on with the upcoming data we have this week. And with tariffs just looming in the wind, we don't have a full and complete solution just yet. Just a tariff pause and a halt with China, which is good, but we're still waiting in the wind to find out what is going to happen. And that's not necessarily entirely bad. We do have year-over-year inflation that's down to 2.3%. And we also have jobs added is up. PMI manufacturing is good. PMI services was good. Overall data was okay. Housing starts were okay. Little rough, but definitely nowhere near as bad as it was projected. Let's dive right in. I'm going to show you guys exactly what we have going on. Also, I'm going to be announcing my next webinar on tomorrow's video. So you don't want to miss that. Watch tomorrow's video to find out when the next webinar is going to take place. Let's go ahead and take a look at the VIX first. I want to go over some things that I teach my Discord, and it's very important to understand there was a lot of fear, and this was happening between April 3rd and all the way until April 11th. There was like 8 days of insane fear. It calmed down when Trump paused the tariffs, and then it consolidated. It was kind of a pattern. When you see something like this, it's indecision. Nobody really knows what's going on. That's why it's going up and down and up and down. There's a lot of indecision going on, but then it gapped down, and as things got better, data got better, and because there was no bad news introduced over a certain amount of time, it kind of fizzled out. And then when Trump came to a deal, or at least paused tariffs with China, the VIX dropped drastically. And you can see this is exactly what we expected. A lot of fear. It was driven up, working its way down as it slightly cooled off. Then we're in a consolidation phase. We dropped below 30, and then it was kind of rough, but at least it was somewhat stable. And then this whole area in here since April 28th has been pretty good. And then it got even better over the last 2 weeks, or last week or so, due to this deal with China, or at least potential deal with China. And of course, the fact that inflation has dropped to 2.3%, and we're also very likely to get an interest rate cut for July. Now, you have to understand this is a lot of manipulation going on because he told everyone to buy stocks and then pause tariffs literally 3 hours later. He told everyone last week to buy stocks. It was a great time to buy. And then 2 days later, 3 days later, he worked something out with China, at least temporarily. So it seems to be very heavily manipulated. The VIX is now officially below the green line. The volatility and the fear in the market is mostly gone. The market is now much more neutral to slightly bullish, which is more greed. And that's where we're kind of trekking towards. We have some data this week. The Lone Ranger here, existing home sales. And then as we go into the coming weeks, there'll be more data, but we have about 2 weeks before the next round of big data is coming out. So we have to look forward to this week is this data right here, which is going to be on Thursday. But what we also have to look at is Donald Trump attacking Walmart, which not really attacking them, but explaining them they should eat the tariffs. There is still tariffs on the horizon, even with the tariff pause. It's affecting Amazon. It's affecting Wayfair, Walmart, other companies as well. This is something that's looming. And prices are high right now. Right now, the market has completely priced in tariff deals with every country. And then when China agreed to talk with Trump in the States and there was a tariff pause and there's some formalities there, the market has priced in this as being indefinite, concrete, permanent. Like they've priced this in. So if something goes wrong, the market will drop, which is why I exited a lot of my positions on Google, Microsoft, SPY. Pretty much 80% of my positions I closed at a profit. And I'm still going to be trading. I'm still going to be working weekly to find the best trades for my Discord and to help you guys out. But it's not ideal to have 50 to 80% of your portfolio holding stocks that aren't good. We're going to go over a lot of that in this video, but this is what I teach the Discord. So if you are new to the market, you're having trouble, you don't know where to begin, all of this is Greek to you. You don't understand any of it. It's a different language. You guys can look to sign up for my Discord, my training course, one-on-one coaching, copy my trades, 2 live coaching calls Mondays and Thursdays while the market is open. You can follow my trades, and you guys will have access to my technical analysis, my hidden gems, and all the things you need to become successful. The link is in the information box below directly to set up and get started with Discord. And remember, tomorrow's video, I'm going to be announcing my new webinar and the next date, so you want to be tuned in for that. Looking at Meta first, we can see that it change of character happened right here, break a structure right here, another break of structure, then it really broke this structure. This was the big one right here. Clearly, this was the break of structure. Let me actually get a straight line right there. And you can see that it's now support on that line. I believe Meta will hold this support and stay in the low sixes, 610, 620, maybe 630, somewhere between 610 and 620 is very doable because that's, right where the break of structure happened. However, there is the looming issue of the lawsuit, and there's also the fact that it's a Mag 7 tech stock, and we have the looming tariff issues. But the moment interest rates get cut, a lot of money's coming into the market, and they've got to get this market to come down somewhere or another. They have to do that in order to bring their money in. You think they're going to bring trillions of dollars in at 640 on Meta? Not a chance. So what they're doing is they're creating a wave of events. They have done this time and time again. They're doing it over and over, as always, with the tariff pause and then telling everyone to buy stocks. They brought their money over. Trillions of dollars. The stock market ran up. They worked deals out with China. Now the stock market's up even more. And now bad news will start to come out. They'll bring the stocks down a bit. Then interest rates will get cut. They'll bring all their money into the market. Will this stock go back? Is anybody's guess if we're going for certainties, but it's unlikely Meta would fall back to 485. However, if we look right here, the scary part is that in this time frame, we are still looking at a potential. If we look right here, this is still very much a downtrend, meaning Meta could come down, support here, something like this, and then just fall off like this. I mean, it is possible. Now, I'm in no way bearish on this market, but you have to be safe. And I have certain indicators and analysis and tools that I look for, and of course, block and sweep orders and dark pool data. And in this dark pool data, it's helped me understand the market trends and where the market is going, which is how I gave my students Microsoft, AMD, Walmart, NVDA, and a couple of other plays over the past 2 months, which printed me almost $70,000 in the last 7 weeks. That's a lot of money in a down market. And I have a lot of students that have been making money in this down market. So with the same tools that I was able to gauge those trades and all of these trades since I launched my Discord and my YouTube channel, I've been using the same data I always do, and I understand the market. And right now there is some pretty choppy seas. So I'm just saying be safe. These are all great stocks that I'm talking about in this video. You just have to be safe because the market is going to explode this year and this summer, likely on data. But right now we have to play it very calm, collective, and safe, and not lose money. If you look at this downtrend, a lot could happen. Even though we broke structure, we need to see lots of consolidation here like this. And essentially, for us to break this line or this trend on Meta, the stock would have to be able to hold 600 plus going out to the middle of June. The stock falls below 600 or much below 600 before the middle of June, then we're in line with this massive downtrend. Even though we dropped all the way down, came up, dropped, come all the way up, and then worked our way up, we're still in a downtrend. You see, it's very clear. It's broken the structure, okay? It has done that. It has done that right here. Structure broken. Downtrend temporarily broken out of. However, because of this line right here on the 4-hour chart, we can clearly see where it resisted. It's still a downtrend. I would only consider this not a downtrend if it was something like this. Then it's sort of not a downtrend. But right now, it clearly still has a downtrend in it on the 4-hour and daily chart. So essentially, we would need to see either one of two things happen. Meta's going to have to break above 665 anytime in the next couple of weeks, or the stock is going to have to stay above 610 or 620 going out to the middle of June. And the further it goes out this way at this price, the more it drags this line out, and it's no longer a downtrend, it's a consolidation trend, which is unlikely to happen. So we're needing a 665 break in the next week or 2 or 3 weeks, give or take, between now and the beginning to middle of June, in order to fully say we've come come out of this downtrend, which yet we have not. So I don't recommend more than 10% of your portfolio on Meta, and I recommend the 33-10 rule. If you guys want to understand what that is, the 33-10 rule, comment below. I teach that to my students in Discord. You don't want to have any more than 33% of 10%, 1/3 of 10% at one given time in a stock. 10% total divided by 3, so you can trade 3 times. I'll explain it if you guys want to see a full video, but you want to be able to do that on Meta or pretty much any stock. Looking at Palantir, Palantir is actually a safer play than Meta in my opinion right now for many reasons. And one, of course, it's overbought. Now it's no longer overbought. It's dropping, but yet the price did not drop below the previous high. It has completely broken the double top peak and pushed through, meaning that Palantir now has a lot of support at 125. And it's very, very likely that even if the stock was to break below 125, the chances of it breaking below 110 or 105 or, anywhere in this range is unlikely. Not to mention, this stock wasn't really affected by the tariffs as much anyway. So this is a pretty good stock. And considering everything right now, I personally would just sell like 105 puts going out a month. Much safer if you get assigned 105 is a lot better. And you could collect a very good premium. Remember, 33-10 rule on any stock. Same for sectors, not just stocks. Looking at SPY, you have to understand something about SPY. It encompasses Apple, Amazon, Microsoft, Meta, Google, and a lot of other stocks. And Apple being the biggest one. And Apple are both going down, then you definitely need Google, Microsoft, and Meta to have some good, decent days to counteract that. If they're all consolidating, but Apple's going down, SPY is likely to go down. And probably not good either. It won't be a pretty day. So understand the SPY's holdings and how each of these stocks affect the SPY, because it's very important when understanding how to gauge the SPY. Again, downtrend is nowhere near like it is on Meta. This isn't even really a downtrend. I would beg to differ that the downtrend officially broke on May 14th at the price of 588. It was definitely over. You can see the difference. This doesn't look like much of a downtrend. I mean, it still is trending down, but it's a pretty wide downtrend. Like, it's not really indicative of anything bearish. You can see that it is pretty much almost consolidation as we're back up in January's lows. You see, this is definitely not a downtrend. This is consolidation. This is a slight downtrend. So this is definitely still technically a downtrend, but that's a downtrend. This is still a downtrend. But as we come up like this, we're really breaking out of the downtrend. The moment the SPY breaks 598, comes back down and consolidates between 590 and 600, we're fully out of the downtrend. Right now, we're just about out of the woodwork. But this right here is pretty strong to me, although nothing's safe. Tariff talk doesn't get better. Interest rate cuts don't happen. The market is going to pull back. And even if these things do happen, they always find a way to make things weird and to manipulate and have things drop down. So we don't want that to be you. 33-10 rule right now is not really much of a buying opportunity. All these stocks are reaching ceilings like Meta, SPY, Palantir, everything's at a ceiling. It's not a great buying opportunity. You have to be safe in these markets. Monday morning, very likely that we're going to have a early morning sell-off. It's not going to be very big, I would hope, but it's likely we're going to have some selling. This is what it looks like to me. I'm not 100% sure of this, but it looks like that's the case. Looking at Microsoft, this is probably the strongest stock of all the ones that I've talked about thus far, quite simply for the fact that they have broken out of the downtrend completely. They broke the structure on January's high, and December's high is being challenged. So this is not a downtrend at all by any stretch of the imagination. Microsoft, very safe. Although for me right now, it's hard to say exactly what a floor would be if the news or the tariffs and all this kind of data is bad, or interest rates don't get cut, or things with China go very, very south, which would not be good and are fairly unlikely. But if that happened, there's no telling where the bottom would be. But technical analysis does show that essentially the bottom right now would be 431, followed by a very, very strong support at 412. And followed by an even stronger support at 395 to 400. Likely 412. It would dip right below, come right back up, would consolidate at 412, 410, 415, somewhere in that range, right around 410 to 415. However, we don't know, because we don't know what data is going to be coming out and how things are in the market. But Microsoft, again, all-time high, not a buying opportunity at all. Great stocks to watch. If you missed the move from January, February, and March's trades, or you're not in my Discord, you never got these trades, well then right now it's a little too late. you'd want to be very careful. 3310 rule. Maybe sell puts a month out at like 405, collect slim premiums, but at least you're getting in at a decent price right now. Could be a good price if the tariff deals go through and interest rates get cut. Then the stock would likely go slightly higher, and I believe Microsoft's worth it, but you want to do your due diligence and make sure that you're dollar cost averaging following the 3310 rule. Looking at Google, this stock ran, it got beaten down with lawsuits. It also got beaten down in some bad news with Apple about how search engine results weren't as strong and AI was taking over. But Google is more than just a search engine. They're Gemini AI. They have Willow quantum computing. They also have AdSense, ad revenue, YouTube. They have the Nest and Google Home products and Google Home for that matter. So there's a lot more going on than just search revenue or just searching in general. So when we look at Google, it kind of got beat up, and you can see it's on a mini uptrend, but still in a downtrend. This is by far not out of the downtrend. First, it needs to break 170 and then 177 to actually get out of this downtrend and have a break of structure. As you can see, the structure officially broke right here, but it already did that before. We have 3 peaks across Google. This is not good. It means that consumer confidence, investors, big institutions are not willing to pay more than 170 for Google. This is very bad news for Google, which is why I exited at 168. And I will see if there's some strength and Google is able to break 170, and I'll immediately add at 170. I'd rather not play this game because if things go south in the short term and it tanks down, I will not be bag holding. And I don't recommend you doing that either. Now, I told you guys if you watched all the way through, we still have to look at SOFI, NVDA, and Tesla. But I told you if you watched all the way through, I would show you a very, very important trick that I teach my students on how to gauge the market overnight Sunday and during the week. You want to open up MNQ1 and MES1. This is your S&P futures as well as your NASDAQ futures. Without going into too much detail explaining what they are and how they work, just understand that it's 6 p.m. Eastern, 3 p.m. Pacific on a Sunday evening. This is going to be indicative of what the market's likely to do Monday morning. You want to watch it in the overnight hours, specifically between midnight Eastern and 4 a.m. Eastern, as this is going to show you European and Asian sentiment in the futures, like what's going on in China, what's going on in Europe, because they'll be able to invest in futures and trade futures. It tells you what the likelihood is going to be Monday morning in the stock market, because this is basically telling you a story of what the rest of the world is doing in their market hours. And as you can see, every single time the futures gapped up or was up in the pre-market or early AM overnight hours, the stock market did very well the next day or that week. But when you look at weeks where it gapped down or dropped, there was very rough weeks that took 2-3 days to recover or more. And if we gauge this back in March, which is exactly when all of the stocks kind of tanked, so to speak, you will see that futures also tanked. And they did this before the stock market did. April 2nd, the tariffs with China, right there. They dropped off and gapped all the way down. And look where this happened. Look at the time at the bottom of the screen, Sunday. So you watch that. And if the futures are kind of going up, you see these candles kind of going up like this, that means we're going to have a decent Monday morning. If it's doing the opposite, selling off, kind of coming down like this, we're going to have some sell-offs Monday morning. If it gaps up like this and you have a candle up here, well, then it's going to be insane Monday. It's going to run and likely for the week. If you see the stock market gaps down with candles like this, big gap, then it's going to be a bad week and a very bad Monday. This is how you gauge what the market's likely to do, and pretty much nobody else that I know of even talks about this. And this is just scratching the surface when I teach in my Discord and, of course, the webinar, which I have coming up very soon. You want to watch tomorrow's video to find out exactly when that webinar is going to be and what time, because you don't want to miss that webinar. I'm going to be teaching a lot of strategies that were exclusive to my elite students in Discord. Looking at NVIDIA with the new deals in Saudi Arabia, we have NVIDIA and AMD that are up to pretty much almost all-time highs. Not quite. NVIDIA's all-time highs pushing 150. It's at 135. It's a little bit off. We technically, like all other stocks, are still in somewhat of a downtrend. You see, this is still a massive downtrend, which is not good. It looks like it's reversed, and it really does, because we broke this structure here. We broke this structure here. All this structure in here has been broken, but we did not break this structure, and we're already pulling down. So if the stock falls below 126, we're still in a downtrend. And honestly, this looks like it's going to be a pretty bearish week. Not like enormously bearish or terrible, but it looks like it's a lot of consolidation, uncertainty, and sell-offs are going to be happening inevitably. So be careful on that with NVIDIA. 3310 rule, remember. Looking at Tesla, it's pretty much the same old thing like every other stock. Massive downtrend was broken, as you guys can see, like so. And then again, and now it's less of a downtrend, but still this big dip, it's coming back up. And this is fairly bearish. If it can't break above 350 and hold above 350, then Tesla could easily just come back down like this, come back up, retest, and fall back down. It needs to break above this line. So somewhere between now and the middle of June, Tesla's got to be between 340 and 350. It needs to hold this price and push upwards. Otherwise, we're still technically in a downtrend. And at this price, although still a fairly good price, I would not want to be bag holding Tesla at 350 if tariffs don't work out or interest rates don't get cut. This week coming up doesn't look like it's going to be the greatest week. However, I have no real way to guarantee or put it in stone until I see the overnight hours, Sunday night, in the futures. But based on all this data and this resistance, we're at a turning point. And the fact that a lot of big money wants to come in and we're on the cusp of interest rate cuts and tariff deals, there's a lot of uncertainty. There could be profit taking and selling this week. Understand the risks. 3310, be safe. SOFI, not as affected by tariffs as other stocks, but a great stock to own in this time, especially with what's going on right now. The bottom for me is truly like $11.50, like right around here, $11.50, $12. So if you can sell puts down here at $12 or $12.50 and dollar cost average, it's a great way to get in. I wouldn't really want to be buying SOFI right now. As you can clearly see, it gapped down a bit and then filled. I think Monday going into pre-market, it's possible we could see SOFI down around $12.90 to $13, and then it would be a pretty decent time to buy. Now, maybe it won't drop this low, but there's no real way to tell until Sunday night. But it looks like with all this bullish run we've had on the market by looking at the SPY over last week, gap up, we're going to consolidate this week, pull back a little bit, and then we run. Maybe Monday morning's a little more bullish than I feel, but I just feel like there is some looming selling that could take place overnight into Monday or maybe Tuesday or Wednesday later on in the week. And like I said, if tariff deals don't go well, you don't want to be bag holding. So 3310 is the rule, and you want to follow my other rules, which is don't lose money and do not over leverage yourself and only buy good stocks. Microsoft, Palantir, SPY, SOFI, Coke, Verizon, Bank of America, Ford. These are all good stocks. Microsoft, Google, Meta. You have to be very careful with Tesla too. You don't want to bag hold these stocks. So you have to be careful because the data that's looming is potentially hazardous to these stocks. And right now, I feel like this upcoming week is going to be a little bit on the consolidation to bearish side, possibly. It really looks that way. I can sum it up for you right now, though, if you really want to know what you should be doing this week, and that is selling some put options at 20 delta that are highly unlikely to get assigned, which would be SOFI at $12 or $12.50, Tesla at 300. You'd be looking at Meta at around 590, SPY at 575, Palantir at 115, and Google around 157.50 or 160, NVDA at 120. These will be very safe puts for this week, in my opinion, but I'd wait for Monday morning to open if the stocks are dropping, wait for the dropping to stop, or wait for the consolidation to solidify. Then you sell your puts. This way you get the most premiums for them, and then the stock has to drop another massive amount in order for you to be assigned or be in trouble. Remember, guys, watch tomorrow's video. Stay tuned for that. I'm going to explain to you guys when the next webinar is. You don't want to miss it. It's coming up very, very soon. And if you guys want to join Discord and learn more than what you just saw in this video, maybe you're new to the market, maybe you're just getting started, maybe you're losing money, I would love to help you. It's what drives me every single day. It's helping students just like you achieve financial freedom. You guys can do so. The links in the information box below. A new direct link to go right and get things set up for the Discord. I look forward to seeing you in the next video and eventually in the Discord. One love, fam.